the S&P notching its 38th record high of the year on Friday, a more than 7% turnaround from its May 12th low. NVIDIA, Microsoft, and Tesla joining the FANG stocks, the 8 companies responsible for more than half of the index's gains. And this as the NASDAQ ticking down slightly after touching an intraday high earlier this morning. And here with his outlook on big tech's bounce, Plexo Capital founding managing partner and former GV and Comcast Ventures partner, Toney. Good morning.
Morning. Thanks for having me.
Well, I'm trying to figure out what investors should take away from the sort of, I don't know whether to call it a head fake. I mean, there was this sense that big tech wasn't doing as well. It's under all this pressure, whether it's antitrust or just sort of big company scrutiny from multiple governments, and yet it grinds higher. Should the attention be there, or should it be on smaller stocks with more room to grow?
What's interesting is that what we initially saw during the concerns around inflation was that, some of the older line industries were able to benefit first from being able to kind of benefit from the movement of dollars towards those sectors. And specifically, I'm talking about things like the industrials, manufacturing. I think now what we're seeing is that the leading of the way for technology stocks, because the growth potential is so powerful, the business models are so powerful, and in particular, a lot of the tailwinds that we have coming out of this pandemic as we begin to see increasing vaccinations, people returning to travel, those are benefiting the big tech stocks as well. I think another area that we see within the private markets is the rise of the fintech stocks as well.
Yeah, and private markets have really been flush with cash, Lo. I wonder in the shorter term, what are you anticipating for earnings season, which is just about to get underway and expectations are very high? Is that a risk for investors? Bob Pisani earlier was talking about some whisper numbers that were even higher than where we're already starting from.
Yeah, look, I think what we're going to see is that there's going to be some nice momentum coming out of some of these surprises with the earnings. I'm highly bullish and confident that the tech stocks are without question going to lead the way. And now that said, there is a lot of priced to perfection within the market right now. So we just need to make sure that those numbers are met. We'll see stability, but we anticipate that we're going to see some nice earnings surprises as well.
Hey, Lo, we've been talking about China all morning long. Last week, of course, the big story was Didi, but ByteDance and Tencent are being thrown in there now. I just wonder, long term, I mean, for so long, China, with its billion population, was seen as white space for growth in all kinds of industries. And judging from the way regulators have been acting, at least in the short term, I mean, how much of that story gets capped off at the knees?
Yeah, look, I mean, the Chinese tech giants, they've lost over $800 billion in value since February. So there are significant concerns, and that is warranted. We've seen the Chinese companies, particularly in tech, ever since going all the way back to Alibaba, which went public after the financial crisis. They've been on a tear. The growth and momentum within the Chinese markets have really been able to propel these tech stocks. Investors in the United States have this insatiable appetite for growth. And we've seen significant movement there. But I think there, without question, is time to take a pause and understand how this is going to play out. Because, unlike the U.S., where, we do see the ability to kind of navigate and work with, at times, the government, that's just not the case in China.
Indeed. Certainly true. Toney, thank you.